gang, if you're looking for ultimate freedom, and that's what I think a lot of multifamily investors are looking for, you go out, you buy a deal that has high PPU, you're going to create freedom for yourself. That's the real goal here. All right, Jake and Gino here. Today we're discussing what is a good profit per unit. Gang, as you know, we own apartments, and most important number to us, bar none, is what profit do we make per apartment unit. So many times you hear about cap rate or cash on cash return or price per unit, but the one term that we never hear is profit per unit. We call it PPU. Today we're going to break down what a good profit per unit is and try to understand why this is lacking from the multifamily lexicon. Gino, how's it going?
Jake, I'm doing good. I'm ready to jump into this bad boy. You know why? We were on stage 6 months ago, and we asked the question on stage. And it was I remember the event was a syndicators event, a lot of syndicators out there. We asked them, by show of hands, how many of you have a buy right criteria? And it was crickets. And we should have asked, how many of you have a PPU number? And that would have been crickets too.
Profit per unit goal. Yeah.
Yes. And the reason why is real estate over the last few years, with the type of market cycle we've been in, all of a sudden, a lot of these investors just poo-poo cash flow. Cash flow is not around anymore. They just understand. They don't understand how to actually invest for cash flow, and they don't understand the long game. All they're doing is looking to flip these apartments, and there's no cash flow involved. There's no long-termism involved. So obviously, if you're not looking to do that, which is fine, I'm not saying that strategy is good or bad. I just think you're just missing out on the golden goose. If you're out there buying one of these assets, you're looking at a 25-unit apartment complex that Jake and Gino bought back in 2013. It was cash flowing okay, needed a lot of work, but we were always focused on cash flow from day one. And in the last couple of years, we haven't bought thousands of units. We've bought a couple hundred units, but they've been spectacular units. They've been part of our buy right criteria. We know what we're trying to buy. And one of those criteria really is
the cash flow, baby.
The cash flow.
Whack. No, but that's the question, Gino. So first and foremost, why do we look at profit per unit and why is it so important?
Man, for me, back in 2011 and 2012, I was struggling at the restaurant. I wanted an alternative stream of revenue. I wasn't out there looking to buy an apartment complex, make a ton of money, flip it, and then pay capital gains, and then be stuck with nothing. I wanted to get out of the restaurant. So for me, it was cash flow. Now, cash flow gets you out of your business and gets you out of your job. I know equity keeps you out
important.
of it. Yes, it really is. But for me, it was always about cash flow. It was always about getting to a certain dollar amount. And what I always envisioned in my life was, hey, if Jake and Gino, the two jabronis, can get a couple of hundred units, and those 200 units can make $200 per month in profit per unit, you do 200 times 200, that's $40,000 a month in cash flow. We split it up amongst ourselves. That's $20,000 per month for Jake and $20,000 for Gino. And then we're not talking about cost segregation benefits. We're not talking about appreciation. I have a little nest egg. I have money coming in every month that can pay for my bills, that I don't have to worry about, that I'm financially secure. Then all of a sudden, once I'm financially secure, I can go out and I can start Jake and Gino. I can start podcasts with Jake. We can write a book. All of a sudden, that cash flow gives me the comfort that my bills are paid for. Now, obviously, that's not the only thing we're working for.
You can get the cherry on top of that banana split if you so choose. You can afford it now.
Well, I can't eat cherry. I can't eat that stuff, bro. It's too many calories for me. It's too much sugar, bro. So we'll just pass on the ice cream. But I know the analogy. I totally agree with the analogy. It's true, though, Jake. The last couple of years, the syndication crowd has said, cash flow's not there. There's no cash flow in this. We're getting some acquisition fees. We're going to, after 3 years.
They've basically supplemented the cash flow for the AC fees. And the potential sale down the road.
I mean, I've answered the question.
I don't want to sacrifice for that.
Yeah. Why do you look for cash flow? You've asked me, but what is your reason? Why are you looking for this PPU number?
That was the only reason I got into the business, was for yield. If I look, this is my business. This is what I'm doing here. This is what's going to generate the revenue going forward. I don't like one-offs. And what do I mean by that? If I'm getting an acquisition fee for putting together a syndication, that's a one-off. What do I do after that? I got to go find another deal. Gang, so many of you are missing the big point of multifamily. You can go out and do one amazing deal. And if you look for maybe a year, 2 years, whatever. You're going to find that deal. You do one amazing 150 unit deal. Guess what? The
Life's over.
handcuffs are off. You're free. No, you just created freedom for yourself. That's the thing people don't get. You go out and you have to syndicate that deal. Guess what? You didn't create freedom for yourself, because now the deal has to perform so you can pay back other people, and then you got to go out and find another one. It's fine. We've done syndications. We don't hate them. But gang, if you're looking for ultimate freedom, and that's what I think a lot of multifamily investors are looking for, you go out, you buy a deal that has high PPU, you're going to create freedom for yourself. That's the real goal here. So you get to ask yourself, what are you truly chasing? And thank you for asking me, Gino. I want freedom. I want autonomy. I want to be able to create a cash flow snowball with growth over time that allows me to do whatever the hell I want to do when I want to do it. And that's not being arrogant. That's what's possible. Okay.
And Jake,
so go ahead.
no, I was going to say, when you're in the syndication space, what you can do to get that cash flow is get the acquisition fees, get some of your money,
roll
put
it
some
into the
skin in
deal,
game, and roll it into the deal. Become a limited partner in your own deal, where all of a sudden you're giving a preferred rate of return to your LPs, so you can get profit per unit from that deal. A lot of, I think, people have the mentality of, oh, I've got no skin in the game. There's no money. It's OPM. If you are investing in that deal and you have your investors in the deal and you're giving them a 6 or 7 or 8% rate of return, if you have $100,000 in the deal, where there's your $8,000 a year, it doesn't seem like a lot. It's $700 a month, $600 a month that you're making on that deal additional. That's your profit per unit. So don't focus just on the equity side. Focus some of that money on getting a profit per unit. And Jake, before we go on, simply, if nobody knows how to calculate profit per unit, just give them the formula on how to calculate it. It's very
well. We actually made the term up. This is no bullshit. PPU didn't exist. Profit per unit. We scoured the internet. It wasn't there. We came up with PPU. Okay. I'm not saying people weren't looking at it before, but I've never heard PPU until we started using it. And I'm wondering why it was missing. But so to get back to Gino's point, real simply, get out your cellular telefono here. Okay. You open it up and then you go to this thing called calculator. All right. So if you have 20,000, let's say you have 100, we'll call it a 100-unit apartment building. Okay. That apartment building made $20,000 in profit for the month. Real simple. You hit the divide button, you go by 100, and that's $200 per unit right there. That's it. It's very simple. And you put it in your spreadsheet, let the Excel or whatever platform do the work for you, and that's how you get it. And the reason it's so important is because we have a large portfolio. We want to see who or what units in our portfolio are performing so we can get more of the units that are performing. So if you're in a certain geographical region and 2 bedrooms are making more money than ones, or 3s are making less than the ones in a profit per unit, you need to know this. Or you're saying, hey, guess what? My units with washer and dryer hookups are making $75 more per month than the ones without. Well, maybe you start to target washer dryer hookups. Oh, guess what? My little townhome that has the fenced in backyard makes $150 profit per unit more per month than the one without. This is the data that you want to be looking at, and this is the stuff that you can actually live off of. So why is it missing? I don't know. I don't know why. This is everything. You need to obsess over your profit per unit, because that's going to make you a better investor.
And Jake, it's really difficult because people are going to ask us, well, what markets, what's the average profit per unit? Every market is different. You're obviously going to have a much higher...
I can tell you what good is. I can tell you what good is for us. I'm not afraid to go there, because I think your minimum baseline is $150. I think if you're below $150 profit per unit, your operation, you either way overpaid for the property or
over levered.
Yeah, exactly. I don't think you're operationally performing. If you didn't overpay and you didn't over lever and you're not making $150 profit per unit, I think there's something operationally going wrong there. So it's also a great KPI to say, oh, we're only making $50 a month on this unit and we didn't pay too much. We didn't over lever. What's going on? That's a red flag. And you should use that KPI to then dig deeper and find out what's happening there. I think 300 is great. You're hitting 300 per unit. I think that's fantastic.
I think we should say also that once the property is stabilized, because obviously if you're taking over property that's value add, you're probably not going to profit. But after 18 months, after the property's stable, after you've done your rehabs, after you've raised rents, and in some markets going to have much higher PPU because their cost per door is a lot more. You should be getting more profit per unit. If you're paying $300,000 for a unit and you're making $100,
but they got to pay though. but they got
Yes.
the residents still got to pay. So because that's why you talk about lower cap rates, to higher cap rates in pro forma don't always pan out to higher cash.
Yes. And that's the thing. So you have to really figure out what your strategy is. And I think right now in the next 2 to 3 years, you're going to see cash flow come back in. You're going to see buying criteria come back in. You're going to see, oh, wow, I can start actually pro forming out and getting cash flow on some of these deals. And that profit per unit is going to pop back up. So start thinking about it. And if you're a syndicator out there, put the money in your deal. Start getting some profit per unit in your deals.
We actually rank it internally, which is pretty cool. So we'll look and see, which complexes are doing the best, and then dive deeper into see, which units are really performing there. So I think it's phenomenal KPI metric, whatever you want to call it, and I encourage everyone out there to use it if you're in the multifamily space, and if you're not, very simple, spreadsheet to start doing it, and there really is no reason not to be using it.
On May 23rd, Jake and I are going to be having a webinar. I want you all to sign up for it. It's go to jakeandgino.com/webinar. We're going to be talking about 3 pitfalls of property management in this part of the cycle. So it's so appropriate to what we're talking about. This is manage right now. No one teaches manage right when you're buying multifamily. Everyone wants to talk about the sexy part of buying deals, financing deals. This is the management. This is the nuts and bolts right now. So on May 23rd, go to jakeandgino.com/webinar, sign up for the webinar, register for that webinar. We're going to be talking about how to manage your properties efficiently in this part of the market cycle.
Well said, gang. As always, we believe in buying deals for the long term. I'm Jake. He's the G Daddy, the G Papa Funk. He the man. And we make
PPU.
it happen. See you next time. Yeah, you know me. We'll see you.